I'm Patrick Camuso, Managing Director of Camuso CPA. And today I want to break down one of the most important structural shifts that I'm seeing in cryptocurrency in Web3. And that shift is what I call the digital asset compliance era. For more than a decade, digital assets have lived on the financial frontier, global, permissionless, always on, and fundamentally disconnected from the oversight models that shape traditional markets. And that period created extraordinary innovation and wealth. And it also introduced a certain level of opacity and shortcomings when it comes to compliance in many scenarios. So crypto still is the frontier for innovation, but it's no longer ungoverned. We're entering a regulated phase where the legitimacy of Web3 organizations and of organizations that are adopting digital assets are going to largely be tied to compliance. And every founder, CPA, CFO, investor, and intermediary now operates inside this new reality. And what I want to do here in this video is go over what has led me to this conclusion and go over what are the implications to people operating in this space, whether you're a founder or you're a CFO or a CPA or someone serving clients in this space. So overall, digital assets are now expected to meet the standards of precision and reliability and tax integrity that govern traditional finance. And like I said, this isn't a retreat from the innovation that we see in the crypto markets. It's the institutionalization of it. And we're already seeing many signs of this. So really, one of the first catalysts of this were signs that we were entering a new era that's focused on compliance is with tax enforcement. Over the past year or so, we've seen cases that I've covered here on my YouTube channel, as well as on my podcast, The Financial Frontier, with Frank Ahlgren III, with Wilcox, with the NFT case, with Roger Ver, which was the most recent one in the headlines. And at my firm, I've seen many tax notices going out this year. And it's made one thing clearer, I believe, to the industry is that on-chain activity is inherently traceable. It's not something that's untrackable, that's too complicated for the IRS or other agencies to understand or to audit or regulate. Every transaction exists on a public immutable ledger. Your transaction flows can be reconstructed, and these omissions can eventually become visible in audits. We're starting to see this demonstrated through some of these enforcement efforts. So this was one of the first signs or catalysts that really started to point out to me that we're entering this new phase. We're entering the digital asset compliance era. And, we're also seeing a deeper focus from regulators and from politicians. There's more maturation from a legislative perspective. For most of the history with digital assets, the IRS and Treasury has spent, issuing notices, cues, and selective regulations, and it just, hasn't necessarily been a main focus of regulators, and none of this was really designed to support a trillion-dollar asset class. And now the momentum is starting to shift towards legislation. Just in Q4 2025 here, just, couple months ago, we even had a Senate Finance Committee hearing on the taxation of digital assets. So I think we're going to start to see more and more of a focus on this. And if you want to see some of the details regarding that Senate hearing, that is something else that was covered on the Financial Frontier podcast. But one thing that is starting to become clear with the different proposals and just the overall focus on legislation that we see, even from competing sides or positions, is that there's going to have to be a coherent policy and structure when it comes to the regulations. And to a large degree, this is going to shape the markets and how the US is competitive compared to other regulatory jurisdictions when it comes to the growth of this industry. So, that is another sign that leads towards we're entering this digital asset compliance era. So another area where we're starting to see digital assets gain more focus and more legitimacy is when it comes to accounting standards. And, we're starting to reach more of an inflection point there. We've recently seen FASB add stable coins and other considerations around digital assets to their agenda. And, this is a signal of a turning point where digital assets are now gaining focus and they're material in a way where, it's getting on the agenda for FASB. And that's because institutional investors can't participate in this industry without uniform recognition, measurement, and disclosure rules that make sense for these assets. And that's why we're seeing the focus here. And this is another reason why we're starting to enter this compliance era where we're going to start to get more clarity. And that clarity is really going to impact businesses that are operating in this market. Then on the tax side, there is a big push towards deeper global tax transparency for digital assets with the CAR framework that brings digital assets into the same information exchange system that governs more traditional assets in, a similar way. And crypto intermediaries are now going to be required to collect this information regarding tax residency data, identification numbers, transaction data in a structured format, and exchange that data across borders. So crypto is entering a new phase of global transparency that is now going to be systematic and all into parity with many other types of assets. Similarly, here in the US, the 1099 DA is a structural turning point for US tax reporters because it's fundamentally changing US crypto reporting. For the first time, digital asset brokers are going to be transmitting standardized transaction activity to the IRS. And what they're going to transmit will grow in detail over time. And I have separate videos where, I've covered the 1099 DA in detail, and we've brought on many guests on the podcast Financial Frontier to also discuss this topic. So if you want to get into deep details on that, I encourage you to check out those episodes. What we're seeing both globally and here in the US with the 1099 DA is that self-determined reporting is starting to get supplemented with third-party verification. And this is creating a new visibility layer for the IRS that should help to address the large non-compliance rate that is currently cited up to 75% by the IRS. So, this is one of the most important compliance developments here in the US in the history of digital assets. And it's something that we're heavily focused on. There are many changes that, are pointing to this now that I've just laid out. And, there's more to consider. Obviously, we're going to see the real world asset tokenization continue to expand across many asset classes with real estate, equities, and, other asset classes due to the benefits that it offers. But this is going to require really rethinking a lot of the classification, custody, taxation, and just the overall regulatory environment around some of these new structures that tokenization is going to lead to. So compliance, as we start to see tokenization scale and increase and touch more types of asset classes and just proliferate, compliance is going to take center scale. And it is going to be one of the main focuses of these companies as we move forward out of pure necessity. Now, as we're entering the compliance era, we're also at a crossroads because the market is somewhat outgrowing the professional services that are available or the number of skilled professionals that are able to offer these services. So basically, the digital asset market has grown faster than the talent base that's needed to manage it and govern it properly. There's very few professionals still that understand blockchain and crypto along with the tax accounting and regulatory frameworks that are required to support them. It is a unique combination of skills. And this gap in expertise is really one of the defining opportunities of the digital asset compliance era for CPAs, CFOs, and other compliance professionals that can add value to this space as we're entering this point where this type of expertise is going to be needed deeply. So, we're seeing two roles really start to emerge as deeply needed in this era, one of which is crypto compliance and reporting. So, this isn't really a traditional accountant or a tax preparer or just a back office technician. This is a role that I believe many CPAs will evolve into as a necessity for companies that are operating with digital assets and Web3 businesses. This is going to combine financial architecture, tax intelligence and reporting, regulatory design, and operational governance. So they're going to be playing the role of engineering the entire compliance stack for companies that are transacting in digital assets and, complying with all of these different areas that we've discussed previously with the TNDA, with CARF, with potential reporting requirements related to real world assets, and designing compliance systems that can withstand IRS, SEC, scrutiny from other global regulatory bodies. So this role is really designed to take the fragmented activity that a company may be having across dozens and dozens of chains and exchanges and all types of business models that are happening on chain and fit them into these regulatory compliance requirements and reporting requirements. And the point of this is so these companies can be successful long term and not run into compliance issues and gain legitimacy in this space, because this is going to be something that is going to be increasingly important for companies that are taking investments or are under public scrutiny is, are you actually compliant? And then to supplement that, the Web3 CFO is taking center stage during the compliance era because, their role is converting this decentralized activity that's happening, across chains, exchanges, and asset classes into investor grade financial reporting and assisting with things such as designing treasury strategies, evaluating risk, and building internal controls. So, together these roles are really going to form the governance structure that companies are going to need to operate on this new regulated financial frontier that we're going to see with digital assets. So where is this all leading in the future is, interesting. And we've covered this in more detail as well on the podcast. A lot of these topics we're going into deep detail on the financial frontier. But the next phase of the compliance era is really going to be built on programmable compliance, regulatory rules and tax logic and reporting obligations that get encoded directly into smart contracts. And compliance is going to become a system or just an element of transacting on chain rather than a manual process. So this is going to raise a lot of questions, a lot of debates, a lot of privacy concerns, and issues that are going to have to be addressed and interfaced between the industry and regulators. On-chain identity frameworks where, you're using verifiable credentials and zero knowledge proofs are going to be something that is heavily focused on in this era because it's going to allow entities to prove regulatory status and compliance to government entities while maintaining certain degrees of privacy. So, this is going to be the new emerging infrastructure that we're going to see into the future as we move deeper and deeper into this compliance era. So, this is what I'm seeing from my perspective in the market as someone that's working with protocols, Web3 companies, digital asset investors, and really looking at different tax and accounting considerations across this space for all types of companies and investors that are transacting across chain. And, one other theme of the compliance era is that there is going to be a collision or a reckoning between regulatory minded side of this industry and the cypherpunk side of this industry, which, were some of the early people that were really involved with it. The ideologies often contrast when it comes to privacy, when it comes to philosophies around tax reporting and other things. So I think this is going to be something else that is very interesting to watch as we start to progress here, what the impact of that is going to be, and some of the conversations that are had around that. From my perspective, the compliance era is not the end of innovation. We are still on the financial frontier, but the financial frontier is going to be regulated, and it's going to create a market that's actually capable of sustaining the type of growth that we've all predicted and hoped for many years as we watch this industry develop. This is going to be where tax law, accounting standards, and decentralized systems converge together, and it puts CPAs and CFOs and compliance officers who can understand how this is shaping the market in a great position to serve clients and really help protect them and help their businesses and portfolios grow in the future. So that is my thoughts on the digital asset compliance era that we're entering now. I think this is going to be the next phase, and it's going to impact every company and every investor that is transacting on chain or that will be transacting on chain in the future. So if you benefited from this video, and if you need to get into compliance, whether you're a Web3 company that needs to establish accounting systems, get into tax reporting compliance with the 1099 DAs, or just overall tax compliance, or you're a digital asset investor that needs to reconstruct your cost basis for your investment portfolio, or deal with compliance or tax planning related to your estate or portfolio, you can contact me at camusocpa.com, and we can set up a time to discuss your business, discuss your portfolio, and see how you can position yourself to get into compliance, to get your accounting in order, get your taxes in order, and make sure that as we enter this new era. So you can reach me at camusocpa.com. Until next time, I'm Patrick Camuso, signing off.